Brian, the company has not given guidance in the last couple of years because of the pandemic. It was so hard to tell what was going to be happening next. You are putting out guidance not only for the full year today, but also for your longer-term guidance. Just look at a longer-term algorithm plan. I think one of the key metrics is that you are looking for operating margins to be up 8% or better for the rest of fiscal 2022. And that's pretty significant when you consider the inflationary picture out there and the idea that you all are investing back more with higher starting wages, up to $24 an hour in some places. How do you manage that? How do you have the idea that you can really say that you can do this with these operating margins at this point?
Well, I think one of the headlines is we are a growth company and we'll continue to grow in 2022 and beyond. And we're going to continue to invest in growth. So that scale benefit, I mean, we're now a $106 billion retailer. It was only yesterday, it was 5 years ago, we were a $70 billion company. So we're a much bigger, stronger company today. We've got scale efficiencies and we're getting better and better at really honing our model. So that gives us confidence that we're going to continue to deliver great operating income, and we're going to reward our shareholders because we're going to continue to invest in growth. We're going to continue to invest in our team, make sure we're there for the guest, under all circumstances. But we're a growth company, and we're going to continue to invest in the future. We're taking up our CapEx expenditures as we go forward because we're going to invest in more remodels of stores and more new stores and invest in capacity. But we're going to invest in growth. And along the way, we're going to continue to invest in our team. And the investments we've been making for years now in our team, they've been fueling the growth. They're the ones that are connecting with our guests and fulfilling those digital orders. And we're just going to be a company that's investing for the future, investing in growth, but we'll reward shareholders along the way.
But in terms of operating margins, being able to do that, part of it has to be size. You're a bigger company, so I guess you can throw your heft around a little bit more, and you do get the volume of the benefit of volume. What specifically do you see that makes you so confident about these 8% operating margins or better?
It gets back to the productivity in our model, the productivity in our stores, the greater efficiency in our stores as hub model. And that gives us great confidence that we'll be a company that grows in a profitable way for years to come.
Are you paying more in shipping right now? Are you paying more for just the value of the goods coming in the doors? What's inflation meant for you?
Well, I mean, certainly I think we're all dealing with inflation, and we've made a commitment to make sure we continue to offer great value to our guests. But we're seeing inflation both from an international standpoint, but also right here with domestic goods. So we recognize there's still challenges with cost inflation. The supply chain bottleneck, it's going to take time for that to unwind. So we've shown an ability, and we certainly demonstrated in the fourth quarter, to be agile and flexible and make sure that we can deliver great value and also make sure that we deliver profitability.
Do you anticipate you'll have to raise prices this year?
We've seen some prices increase, but we're also trying to make sure that our price position versus the market is one where we're taking care of our guests and offering great value on everything from household essentials to those key items that we know our guests depend on each and every day.